Hey, g'day guys, Sam here from TradetoProspa to give you a crypto update on Bitcoin and what we're looking at for a key position to short. Looking at the Fibonacci as you've seen, I just want to give you an outline of how certain ways of looking at Fibonacci and how these all these have confluence. So what you can see, the main resistance level, or the levels of resistance are based on these Fibonacci's. You got the 200 daily moving average, which is the red, and you got the 21 month the weekly moving average, which is currently acting as a resistance. So it's actually hit that. Just because the day hasn't closed, you don't see it with this tool. But if you push it forward, it's actually playing resistance. You can see also it's at the weekend. So when we have these wicks right there, it's pretty much playing the same position as well. Right. So what's this chart here? It's a continuation pattern to the downside based on harmonics. So let's have a look at that. And basically what I see is that a possibility. So this level here is an area of interest. If I was to just make that circle bigger, this area is going to have a lot of resistance, and chances are a rejection is on this 1.272 or further up. We'll have a look. So just keep that in mind. So that's one possible scenario, and we're looking for further downs like that. That's a bearish scenario. Let's get rid of that. Let's put on this. We've got this harmonic that's playing out, also potentially playing its bit. If you do a fib extension, it's pretty much hitting the one fib extension from swing high to swing low. So what we have this is accumulation, and now how high can it go? So Wyckoff accumulation, we have a number of positions, a number of reasons why it's gone bullish. So let's have a quick look at that as well. What we had is this, basically this line. Let me just push it there, and what you can see is pretty much a V shape. And let's see, where's the other part? If you want to look at that, that is what is known as an Adam and Eve. So the neckline is that, and can we do this as a neckline? Not sure. That's the difficult part. So we've got two levels of interest. That neckline is already, this harmonic or this measured move has taken place. So we've pretty much come to it. This is the other measured move, potentially. So again, that's perfectly hitting the 200 daily moving average. And you can also look at this as a reversal pattern. And then there's got this other bigger measure move. If we were to count that, of sorts. So if it was to go above that, that's what I'll be having looking at. And you can see how they are confluent with a number of Fibonacci's. But this level is I think we are a significant level of interest, because the 21 daily is a good sign of, if you pass that it's been acting as support for a long time if you look back, and it's actually, it hasn't really been touched really until it goes further. We've got this Bybit chart with perpetual, so I want to use that, which is more interesting and more probably accurate in terms of money. So that's what we have at the moment. There's one more Fibonacci that I want to put in. That is the macro Fibonacci. So let's have a look at that. Just remove these ones. And you can see from the macro perspective, That's the one there. The 1.618 is definitely a strong resistance as well. So basically swing high, swing low. 1.618 from another perspective is right in the middle of this. Now, if we were to add another key component to this, where is it? This volume profile, you can see how the point of control based on volume is also very close to the one. So even if it breaks this level, which is easily, we're not going to use it because it's only got 2 reference points. So it might be just like, okay, we use that, the body, and then you see how it goes up a bit more if we ignore the wicks. And it's just the means, but it's very close to the same Fibonacci of 1. We also got that point of control based on volume right there. So this is, and the 1.618, difficult level to pass. And I do think that we will find as it goes up, we'll see a topping off motion and then we'll come back down. Now the question is, how far will it come back down? In these cases, sometimes when there's a strong move, there's a strong reaction, and then you know that there's more further to come because the reaction will give us an idea of what's going on. This is a strong move, and it's on the daily. Now let's look on the 4-hour, see what's going on. So we already got a rejection there based on the wicks. So this is pretty much a double top. Now we're not finished yet because, like I said, where is it? Here we go. This is the initial. You might range here for a while. I don't think it'll range too much. The CPI comes out tonight, in my time anyway, and that will make a difference in terms of how high would it go, or if it maybe just goes reverse and just becomes a fake out. So the CPI will probably have an effect on it. Now this is a triangle or an Adam and Eve, and these are the measured moves. So the measured moves are to these levels here. If I was to put this price in there, you'd probably have a better look. And here's another one, the other bearish scenario. Where are we? Is this one? Okay. Let's just get rid of some of this. Let's get rid of some of this. The bearish scenario. That is the 0.5. Where is it? Okay, here we go. So that's a 0.5 fib extension. So we can have this harmonic play out as well on the 21 daily moving average. And we're looking for 2 to 13 Ks as well. So if we were to just pull this back a bit, that is a harmonic that can potentially play out. You might have a wick or two, but yet again, this could be, if we were to move it up a bit more, 618, and it hits that level as well, the one. So you can see how all this comes in effect. And if we look at that, we even actually hit the 2 there. But this is another bearish harmonic in the making, potentially. For now, that's what we have. We have this playing out. I do think that we'll pass the 21, but the 200 is going to be the most difficult stage, and it's also hitting the point of control that's been there for this. This took 3 months, and so it's likely to come down. Now let's look at from an indicator perspective. So let's just add our indicators. Let's look at the RSI. There's a few things that we can look at, and actually one more thing that I forgot to look at. Let's get this out the way. Yeah, Bollinger Band, and we'll put on the daily. You can see this Bollinger Band, which I customized. If you want a copy, just tag me, give you a copy. This Bollinger Band has three degrees of variation. So if you look at the, where is it? Okay, the options are there. So we can move. So we're in the extended, the 3 level. So we're highly extended, and chances are, so we had this squeeze, nice squeeze, and you can see how once it once the squeeze is complete, this didn't go down, this went upwards, so that gave us an indication that's going to go up. And the most important part was that we broke this mean level. So that became support. So from a Bollinger Band perspective, we are pretty much overextended at the moment. It doesn't mean it can't keep going, but there's going to be where if it drops out of the 3 degrees variation, see, you can see most of the time it stays within the 3 to the 2. And so this is a very strong move. And can it be sustained? Um, that is what is yet to be seen. From an RSI perspective, I like the 3-day chart, and I want to point a few things out. We had this long-term RSI trend line, pretty much, and when it broke out, you can see how it did break out strongly, but it just came back down and went dipped below it. So having a breakup from the RSI is not something that you can rely on. I see a lot of people talking about the RSI, especially on the weekly. You can see that one is broken out again. So this is a 3-day chart. So it's got the momentum, but then there's nothing why it can't come back down. So it's at that. So we might have a look at a few levels for the RSI, but the 50% is definitely, it hasn't closed the weekly yet. So we'll see if the 50% is closed, but it doesn't mean anything in that term, but it's positive. That's all it's telling us. So get rid of these drawings. Let's look at the weekly RSI, and from a weekly perspective, you can see, like I said in the past, on the daily. Now that's the move that we had. So we had a strong week that broke because it closed above this RSI. It initiated the rest. So now, what is this likely to do? That's the hard part. So we might just go to another chart which had more RSI history. While I'm here, I'm going to show you one thing why we found support here as well. So if we were to jump onto area on the weekly, you can see this trend line. Now if we break this trend line, and you can see the confluence, using that, the weekly candlesticks, if we drop this level, we're going to drop hard. So the weekly is coming to 21 moving average, as you can see. The RSI perspective, historically, when we break a particular level, we get confirmation that it's bullish. So now this one is a difficult one to do, because if you use the top to the bottom, it looks bullish. Yep. And if we're to go back, so that is a bullish sign, number one. However, depending on what you look at, it doesn't mean they can't go sideways like that. Even so, what you do is you have a reference point, and it could go sideways for a while. So there's a level that becomes bullish. Here we broke above it, but you can see how it came back down above, went above the 200 and come back down the 200. So now we want to see break above. If it breaks above the 200, it's going to be a fair bit of a move. And let's go to the candlesticks, and here we go. So keeping an eye on this 200 weekly. Here we will actually we'll have some lessons learned, and we can go through it quickly. you can do the Fibonacci level, pick our reference point. So that was our 618 from that perspective. We've done this in the past where that is the 0.382 where it became resistance. And in my eyes, this is actually from there to there. We found another resistance and that trend line. Now this is looking very bullish actually, but it needs to close on the weekly. So this trend line is seeming to do the job, but is it sustainable? We'll see. We have upward momentum. The 200 is likely to come back down. Now we get the rejection there. They're just going close. We have another level there. That's where it's likely to get resistance. So this is the weekly RSI. It's not closed. So it really depends on how the week closes. And if this goes above the 20 and hits the 200, then and closes that way, we'll need to see the weekly close. And in many cases, when we hit the weekly, it get a bear flag of some sort, like a shooting star or a doji. And in that case, that was a doji and a pullback. So we just need to see that level respond. But we have some other tools that tell us that there is definitely momentum to the upside and the USD tether. Now, here's one last bit, bullish divergence playing out, right? That is what's playing out, the bullish divergence. Now, is the bullish divergence going to pull this back again and then do that? So that's what I'm looking at. If it closes above, guys, that's going to be bullish. And that means that we're going to do a higher, and then we'll have a look at a Fibonacci level, and then we'll think that it should pass if this was to continue on. But above that, then the 618 is likely to be the next resistance. And in many cases, we might just do that cup. And then that's what we're going to look at. If that's going to be an important level, if we break above it, this is definitely going to be a strong resistance. Might get a pullback because of overbought conditions. And then we'll see this potential Adam and Eve again. And if this is what it's meant to be, so what we have is really 2 points. This one here is going to come back down, or I'm going to break up. I'm going to leave it at that. Almost out of time. Give me a like and share. Come and join our Telegram group. Talk to you soon. Cheers.